What is value investing? I'm Nate. I'm the FitFutureMD. I'll upload every Monday, Wednesday, Friday. Pick up your free copy of the Nutrition and Workout Guide in the description below. It's 100% free. I'm the owner of Ensorsale. Ensorsale is family. Together we rise up from humble beginnings to inspire others all over the world with the messages on our t-shirts. Wear your inspiration today. If you don't see your inspiration up there, send me a text, send me an email, and I'll get it up there for you. Use code FitFutureMD for 20% off. So, we're back on the, stock market trend. We're back on the investing side of the channel. And, so it comes in, what is value investing? Well, value investing is basically like bargain shopping. The value investing is like bargain shopping. So, the reason you go to Ross, the reason you go to TJ Maxx, the reason you go to Kohl's is to get deals on name brand items, right? So, and the value investing is basically the same thing, right? We want to find a company that is basically on sale, right? It's a good company, it's making money, but something in the market has made it go out of favor, that we can take advantage of, right? So that's value investing. You're basically finding a stock that is undervalued and buying it. Now, the most famous people that did this, number one, was Benjamin Graham, right? He's considered the father of value investing, right? But number two that has made it the most famous is Warren Buffett, right? And he was basically the protege of Benjamin Graham, right? So, as you can see, it has made Warren Buffett one of the most, one of the richest men in the world by value investing into other companies, right? And the whole point of investing, right, is to take part of your money that you earn and make it where it makes money because of other people's labor, other people's work, right? That's what investing is all about, right? So you're basically using leverage of other people working, right? When you're not having to, you're putting up the capital, you're the capitalist, right? So, so what are the advantages and disadvantages of value investing? Well, you obviously want to, when you find a good deal, sometimes it's a good deal, because it's last year's style and that style's not coming back, right? So it's very easy to fall into place where you fall in love with a stock because of its numbers, but it's fallen out of favor completely and it's just going to keep falling, right? So what are the metrics that I use to find a value stock? All right, well, I'm going to use one thing called a screener, right? And a screener is going to search through the stock market and find find stocks that meet certain criteria, whether that be the price to earnings, that be considered what's called a PE ratio, price to earnings. So that's the difference in the price divided by how much per share the company earned, right? So say a company is trading for $10 and it earned let's say $100 a share. That means you'd have a price to earnings. No, let's back it up. So let's say you have a price of 10 and an earnings of $1. That means you'd have a price to earnings of $10, right? Or a 10 multiple in the price, right? So that's one thing. Another thing is, does the company pay you to own the stock, right? That's called a dividend. And I like to be within 0 to 4% on a dividend. That's my preference, right? So, so say the market goes down a little bit, I'm still getting paid that dividend to make up for it, right? Or getting cash flow, right? People talk about cash flow all the time. So, cash flow, that gets you, some money coming back, right? So a dividend, price to earnings, right? And then I'm gonna try to find out why this company is down, right? Did they have to make a big investment so their earnings went down? Are they being beat out by a competitor, right? So for instance, natural gas just recently went through the roof, right? When Russia-Ukraine war started, because basically the US was going to send natural gas to Germany in the winter, right? Which is, happening now, right? So natural gas, so all the companies that were natural gas companies, they went through the roof. But, other things because of that went down, right? So you have to figure out what in the market actually caused these things to go down, and is that going to come back or not? And that's really when you're doing value investing, that's really what you're trying to figure out, right? You're trying to figure out, is this stock actually going to come back to what it's valued, what it should be valued at, right? There's venture capitalists and stuff out there that, are looking to break companies apart, take over companies, do all kinds of stuff, right? So for instance, at one time, Lumen was called CenturyLink, or Lumn. Lumen was CenturyLink. Well, CenturyLink happened to be in the area that I live and do the phone service in that area. But it was very clear that regular phone lines are being beat out by fiber optics, right? But from Spectrum, from AT&T, from all these other things, right? You got Verizon not putting in, fiber optic line. They got them using, boxes that use the cell towers, right? Stuff like that. But, so there's a lot of competitors that came into that market that are beating CenturyLink, right? So much in fact that Lumen had to cut their dividend, and when they cut their dividend, they went from $10 to $2, right? Because now all of a sudden these ETFs and the dividend funds and all that stuff couldn't keep, that kind of thing. So I, had invested in Lumen for the dividend, saying, hey, well, they're still making a bunch of money. They can clearly invest into other things and fix the company. Well, they dropped that dividend. Obviously, it went from $10 to $2, right? Luckily, I was out of it at the time, but I invested in that company, hoping to get as a value investment, right? Because, they were making enough money that I could see them investing in something and being able to bring their company back, right? That's just one example. But, I was keeping up with market trends and realizing that, they were gonna have to cut the dividend, to save the company. And so I got out. Stuff like that, right? That's one example. So another example is, Warren Buffett recently invested in Capital One. By the time I realized that he invested in Capital One, it was too late for me, right? The stock had already jumped $10, right? So I looked like, well, what is a company that's undervalued, that's similar to Capital One, similar business model, that I could take advantage of? And the company's name was Citibank, right? Which we all have Capital One credit cards, Citibank credit cards, Chase Bank, etc., right? But, so I invested in Citibank, which is basically a similar company to Capital One, and made a killing on Citibank, right? You know, this thing went from like $30 to I think it was at like $57, right? So, and those aren't exact numbers, they're off the top of my head, but it's, you know, made a pretty penny off of Citibank, right? But it was a very similar thing to Capital One. You know, it has a dividend, its price to earnings was under 10. You know, it was down because other banks were going down, not because they were doing bad, right? And it was very clear that, you know, a rise in interest rates are going to make banks more money, right? So especially when your big business is credit cards, and people are using credit cards more, right? So you're going to make more money as a bank, right? So, you know, that's just one example of value investing, right? Now, the difference between what I do and what other people do is, so Warren Buffett is basically an insurance company, right? Owns Geico, owns other insurance companies. And so he's getting monthly checks coming in to invest. It's other people's money, right, to invest. I don't have other people's money to invest. I have my money, right? So I can only put a certain amount of money into the stock market every year. So me personally, I'm not holding long-term these stocks, right? I am personally flipping these stocks, right? So, but it's not a daily flip. It might be I hold it for a quarter. It might be I hold it for a month, right? But so last year, the S&P 500 was 24%, and I made 34% last year, right? And it's not a huge difference, right, than the S&P 500. And I also, anything I was losing on, I sold at the end of the year, right? And by selling at the end of the year, I negated my taxes, right, on those things. And I still might believe in those stocks, so I might buy back into them. I might not. We'll see, right? So I tried to negate my gains by selling my losses, right? And that's called dollar cost averaging. No, it's not called. That's called something else. But anyway, that's called tax loss harvesting, right? So if you have a loss on something, you go ahead and sell it with the intention of buying it back later, but you use that loss to negate your gains basically that year, right? So that's why I'm in the 34% range, right? It was way higher than that, right? But, you know, but basically I'm trying to build the $1 million portfolio from less than $10,000, right? Matter of fact, I started with $1,200 check, a stimulus check, right? Just like everybody else, you know, in 2020. I got lucky at the beginning, but, you know, now I have a strategy. This is my strategy, you know, and I'm using chart indicators to know when to buy and sell, right? So I sold out of Citi, I sold out of Bank of America because they were what's called overbought on the RSI, right? And they still kept going up a little bit, you know, after I sold them, but they are going to go back down because they're overbought, right? At some point, you know, people are going to take their profits, or hedge funds or ETF managers, you know, where they're not getting taxed, they're going to take their profits, right? So I want to take my profits before they start taking theirs, you know, so I'm not caught in a losing game of trying to sell on the way down, right? So that's what I do. They're all S&P 500 companies, you know, when I do this stuff. This is not any kind of financial advice. This is just what I do. Hope it, you know, kind of helps you have the knowledge of value investing. Make sure you know, go buy the books on value investing, learn how to do it, right? Use the the free trader side of TD Ameritrade, to learn about it, to practice it, to do it, right? And make it a game for yourself. I get up every day, 4 a.m. First thing I'm doing is running that screener, trying to find a stock, right? And before I even go to work, right, I have everything I'm gonna buy that day already picked out, what the price is gonna be, all that kind of stuff. So if you're a person that has to go to work, you can make this happen in less than 10, 15 minutes a day, right? So, and I use 1 year, 3 year, 5 year indicators to figure that out. So I'm Nate, I'm the Fit Future MD. Let me know in the comments below what you think about value investing, and what other strategies you might use in investing. Shop at Ensorsale.com. Wear your inspiration today. If you don't see something you like up there, send me a text. Let me know what you want on it, and I'll try to make it for you. Use code FitFutureMD for 20% off, and we'll see you in the next one. Peace.